see, how's the stream going? Nice. Alright, back online. What's up, guys? So back from the rock climbing wall. I was able to get my first V2 today. Very exciting. But now that I have some time, I'm going to try to finish this update on VF. And then later today, I think Microsoft, Meta, ServiceNow, automatic data processing. I don't even know what they do. Okay. So I guess there's some type of like business productivity payroll software. Payroll processing. Okay. Okay, so it is kind of like this legacy solution then. Oh. That's nice. Alright, so going back to VF, so we were able to actually find, I'm like chewing and eating at the same time. But this is interesting because, here we go. We can take a look at the channel revenues. For each of these. So this is 3 months ended 2024. So this is for wholesale. 8785883. Active 305 803 159 251. Okay. Wholesale 937. Yeah, looks good. Okay. Nine nine seven 454 254 50318. Alright, so I guess I think this is kind of like a trend where we see the direct-to-consumer actually outpace wholesale revenues in Q4 compared to Q3. I guess this makes sense, right? Because a lot of the retailers are buying up inventory in Q3 and then selling through in Q4. And so on the flip side, I guess VF is also selling through within its own retail distribution. So I guess whenever they have their own stores or e-commerce websites, those are some big hitters during the holiday season. Okay. And the royalty. $7,406. Okay. Just yeah, might as well just Oops. Okay, nice. It is a bit hard to see. Just make these blue for now. Okay, but let's take a look at the direct-to-consumer. So direct-to-consumer year over year, yeah, that's rough. It's minus 36%. But there's this discontinued operations part, right? And we did see year-over-year growth and sequential growth, okay, in the outdoor segment. Okay, so Paul said in conference call that wholesale partners BF benefited from wholesale partners ordering ahead of Q4 for Lunar New Year. So reorders from partners that sold through inventory quicker than expected and less cancellations from wholesalers. I think that's actually a pretty interesting note to see on the wholesaler front. Okay. That's geography. Nice. Okay. So America's great. I think great for the Americas, 16%. Europe, let's take a look. 643, 699. Oh, wait. Yeah, maybe a little bit too great. Because 16% is... Yeah, there we go. So actually a decline in revenues. So a decline because we didn't factor in Supreme, right? Okay. $2023. This is a wholesale. Direct to consumer is 548. Wait a minute. 180 million last year. It's not bad actually. Yeah, it's even more than Dickies. There's no way. Did I get this right? So that is right. Okay. But Dickies does sell through a lot through wholesale, so maybe that's it. $147, I mean. Yeah, it does seem like a lot, I'm not gonna lie. Maybe a bit too much. 180 million revenues in Supreme. Could be, actually. Okay. I'm gonna take it as it is. I think probably it's true. So in the direct to consumer, 58, 309. Yeah, looks good. Same thing. Okay, so Supreme doesn't really drive any of the royalty revenues. Okay, so this is geographic. I'm gonna also factor in Supreme. Okay, so geographic and the Americas. Right. Okay. Active. Whoa. This is 9 months. Okay. Four, 5, 4, 2, 5, 4. Okay, so majority of this is in America. 4, 5, 4, 2, 5, 4. Active. Yes. Maybe this is the better way to do it. Just do that, right? Instead of actually hard coding it. Oh god, I'm also really hot right now. Okay. So Supreme discontinued. So in Europe, 233, 423, about 30 million. Asia, I would imagine maybe, it seems like it's actually less than what Europe is. Okay, active. 75. Oh shoot, this is not the right one. We need to use 2023. Okay. 02923. Okay, so let's three, 7, 800. 478,854. Right. So this should equal whatever we had earlier. Just to double check. Not quite. This is the outdoor or active wholesale. 264531. Five, 4, 8, 4, 6, 5. Okay. This is slightly more than what we have here. So is this right? 478,584, 237,800, and 102,923. Yeah, it is. It is a small disconnect though. Maybe in the range of like 1 million. So it's not that big of a deal. It's kind of bugging me out. $819,307. Okay, I'm definitely doing something wrong here then. Wait, 237,800, 478. Oh. Okay. 584. Wait a minute. Okay, nice. So this is exactly the same. So that's good. Jared 80, 89. So it does seem like most of the sales did come from its holiday season then. Okay. this will be 2024, and then Q1. Let's take a look at this. So let's take a look at guidance. Oh, VFC earnings release. Q1, I guess total revenue would be some other brand. Earnings results. So other brands. 424.4 and 436. So is this right? 2739.6. Yes, that is. Okay. So negative 5%. Point of guidance, so negative 4% to negative 6%. Okay, and then negative 2% to negative 4% constant currency. All right. Okay, so this would make this times 1 plus. Oh, last year versus last year's revenue. Okay. So even with Supreme, company revenue is still up 2.83, which is really nice. Yeah, it's really good. This really is a standout. 15%. Who would have thought Timberland, incremental, what is that? 80? 80, wait, yeah, 86? Damn. $86 million. So 86, 123, divided by, let's say, average selling price is 100. It's an extra 860,000. Number of orders. Okay. I'll do this like a green maybe. So green, operating income adjusted. Okay. It's a very, very long way of doing things. Wait, what the? Okay. So maybe it was a good idea to keep the revenues there. Okay. Yeah. Cost of goods sold. Okay. So operating income 30 million to 0. Oops. Free cash flow. Oh. Yeah, maybe here. All the balance sheet stuff. So guiding 440 million. Increase versus previous guidance of 425. Okay. Cool. Three-month ended in March. Okay. So, this is it, right? Cost of goods sold 381 589 205 20. Okay, I need to add the channel revenues, or I guess segment revenues. Let's take a look if they have it. They do, nice. $287,199. $28168. Okay. Second revenues for active is 11315. One 185. Segment profit is 113420. Okay. Second revenues 131320529, which is still more than what? Oh no, this is. Second profit, so active, 114,816. Oops. Okay, so this is really, I guess, where margins sort of peaked, that 50% range. I have 83. Okay. Yeah, I think I bought in around here, March 2024. Right. I think at that time they had already impaired both Timberland and I think Supreme. Okay. So interest expense then was negative 49,237. And then other income expense was negative 5,879. All right. Okay, income, expense, benefits. Negative 1107. 2 income from okay. Into 53,827. 250470. I don't know where I got this number from. Oh, yeah, that's not it. 227. Yeah, 56% gross is not bad. Okay, 48. So here we go. There we go. Negative 15%. So this is the first time it seems like this company has posted a profit. Just looking at these numbers though, still missing a lot of things. Okay. So interest expense. 5477 883. One, 2, 2, 5, 2, 7, 7. 6, 5. Okay. Net income tax 8669. See, this is wrong. What happened? Okay. Got it. And then free cash flow. So I think we can compute the net leverage here. 965. 4226. 5152. 709. Okay. Total assets. $13,990,488. 11,612. 963. Oops. Okay. So short-term borrowing 263,938. 1,000,721. Okay. So that's still when they had to pay it off. 5,192. Current liabilities of discontinued operations. Do not need that. Long-term debt 4702284. Okay, 155 156 858. Stockholders' equity is 1658 365. Okay, so it still had a 4.3x net leverage, or I guess debt to equity ratio. In fact, this actually, okay, you saw an increase in the operating lease liability. It seems like by $100 million. Yeah. Okay, so 2963. Guess let's do a check. Should equal 0 across the board. Oh wait. That is okay. All right. I don't know if you need all of this to be bolded either. Okay, so that's good. Now we just have to do it for the side. 94244. Short-term borrowings 1491. 924305. 936 319. Accrued liabilities 1673 651. Okay, long-term debts 5711014 1171 941. Total liabilities is 11079.5. Stockholders' equity 2910. So, okay, there's a 2.7x, right? But I feel like a lot of the assets on this balance sheet were probably intangible. And so as they impaired goodwill and intangible assets, then you started to see this net leverage ratio, or this debt to equity ratio, sorry, come down a lot. Probably go up a lot. So big impairment loss. Maybe a lot of spending on working capital, or write down working capital. Okay, free cash flow. Got it. Okay, so historically, it seems like in the first quarter, operating income has been negative. So it does seem like this is very possible. Also, 30 million, it doesn't seem that bad if you look at compared to, So if we take out the impairments, then it's negative 105, right? Then if we take out this, then it's 152. Oh, shoot. Okay, so this actually would have had a positive. Got it. So in 2023, they would have had positive operating income if it wasn't for the impairments of goodwill. I think SG&A. If we really want to go deep into the analysis, we could take a look at Q2's P&L. Shoot, I don't want to spend this much time on this. It's taking a while, but screw it. If we want to be a good analyst, this is what we gotta do. Okay. So 1,317,391. One 66654 0 73903. Okay. 3, 6, 7, 8 plus minus 4, 6, 3. 3, 6, 6. Okay. $28, 0, 4, foreign currency translation, other. It's the balance sheet. It doesn't matter. I'll take a look at this for now. Okay, so operating cash flow, 6 months in. Okay. -281,771. CapEx wise, -45953. Maybe I could also lump up software spend in there as well. Total assets 12,219, 638. Okay, short-term borrowings 463, 200. Okay, 1750,097, 1131. 637, 147, 791. Long-term debts. 4982, 431. Okay, operating lease liabilities. Nice. 8x? Jesus Christ. Okay. Okay. Let's also take a look at this. June 2024. Okay, I'm gonna try to feel out the numbers, right? assets. Four, three, four, 9, 1, 3, 1. Short-term borrowings. 2, 6, 3, 7. 1, 7, 4, 9. 6, 0, 1. Okay. 7, 7, 5, 5. 2, 3, 7. 9, 9. Long-term debts, 3940, 668. Okay. 1167.5, then 10 51 458. Stockholders' equity. So that's 1387. Oh, 79905. Okay. So I guess at some point that leverage was insane. 214794. CapEx was negative 59231. Okay. Okay, yeah. Let's take a look at the P&L. So I think this is actually before the Supreme acquisition. Let's just scroll up. Wait, do this. It's a segment. Okay. Segment revenues. Okay. 90199. Year-over-year segment profits. Negative 83,415. So active was 942,139. 985,549. Okay, work was 174,963. And then 5328. Oh, shoot. Okay, this is not where I should have done it. Zero, 462. Okay, nice. So now we can go to the P&L. Income. Just scroll all the way up again. Okay, so cost of goods sold. It's 915,643. 52% operating margins. Okay. SG&A 106. 6. What is it? 551. Then impairments 145000. Just add it there for now. And yeah. Okay. So this interest expense was 3554 minus 59231. Okay, and then negative 1950. So this negative 520 interest tax expense 38634. Okay. So then we can see here. Okay, so operating margins have improved since, even with impairments. But I think most importantly, as a percent of revenues, SG&A has fallen a lot. Yeah, okay, so this is a good sign. Percent of revenue. I think Brackendarrell, he came in around Q3, September. So somewhere around June, late June, early July. It's when he took the reins. I think specifically June 27th. But his transformation plan really started to take action, it seems like, in this area where you started to see a huge reduction in SG&A as a percent of revenue. Okay. So I think that's a good sign. And let's go back to guidance earlier. Not this. Damn, I can't even find it. Oh, here we go. So gross margin up versus last year. Last year's gross margin was around 58, and I think someone asked in the Q&A, could be 50%. So 200 basis points above last year from conference call. Okay, maybe their definition of free cash flow is different from mine because I didn't even incorporate non-physical asset sales if that's not part of the operating cash flow. So I think with this, let's go to the Substack and finish up what we have to write. Dashboard. Okay. Optimistic outlook. I might have to change this up. I thought it was optimistic. Turns out the market doesn't. Right, so these are the Timberland boots. Redwood Falls and Britain Road were popular styles. this holiday season. Okay, and then the Stone Woman's Stone Street franchise. This line of shoe resembles an UGG boot with, I don't know what that thing is called, with some like plush lining. I don't know what that term is. Pile lining? What's it called again? Stone Street Timberland. Line waterproof boot. Okay, never mind. These aren't just all Uggs. These seem like platform type shoes. The Stone Street line of shoes all have a noticeable platform to them, similar to the Vans. Mary Jane. Beatrice Demond by Beatrice Demond, released this quarter as well, to the platform from okay. Some specific highlights to point out. Going forward in I'm excited for what's here from, I think the leader, so brand leader of VFC, Nina Flood, right? Flood during the investor transforming Timberland, what she has in store, product / brand development. Okay. In the preview article, I mentioned that we mentioned the Skins X North Face collaboration as an exciting moment for the brand. for 1253. Okay. I don't even have geographic breakdown, which would be actually pretty helpful in understanding where this is coming from. Okay, so segment revenues. Channel revenues. Wholesale. Outdoor. Okay, outdoor. .1%. I'm curious on how much of that is dollar amount. So 60 million, wow, okay. For the brand, with many of its items selling out the day of drop, just within a week after the drop. North Face continue. .7%. North Face drop. Yeah, Strong holiday. In addition to this positive one key insight from the earnings presentation was the sell-through of inventory at higher ASPs, prices closer to MSRP instead of heavy discounts, relying less on the use of heavy discounts, right? Management attributes this to, call it, enhanced merchandising, and operational execution. honestly, I might need ChatGPT to break this down for me. Like, what does enhanced merchandising even mean? Don't know. Okay, let me just open it up here. I might need to sign into my account, so. Oh no! I think my thing is frozen. Shoot. Okay, in that case, it's okay. Alright, let me try to restart this screen capture. Oh, okay, nice. Full stock, advanced seasons, discounts. Okay. Probably better inventory mix. Lower items out of stock and displays. So what about the operational execution piece? Okay. Key markets, key weather, it's colder than last. Instead, revenues fell to this quarter. Kraken made it very clear in the earnings call that he was expecting the fans' recovery to be a slow and methodical process, but is optimistic about the future. CEO says that. Key point he mentioned in the earnings call was the sales of new silhouettes. Silhouettes. I don't even know how to spell silhouettes. Silhouette? I don't know how to spell silhouette. Okay, O-U-E-E-E-G-E. New school, upland, high-end are currently outpacing sales of old icons. So old school slip-ons, skate highs. That is positive. So that is exciting. I think that is some positive news, but from the call it seems like I felt that the analysts were a bit impatient on progress of turnaround and were looking for any insights onto trying to dig for any indications of positive growth, to which Bracken dodged all the questions and basically, yeah. To which Bracken dodged basically, so regarding the fans brand positioning, product development, deferring them to the March Investor Day presentation with brand presidents Sun Cho. So, on another note, with regards to, oh god, my stomach is hurting so much from drinking coffee and just eating these carrots. It was not a good idea to do that. See, fans worked for Warp Tour. Yeah, kind of want to look on Instagram for that. Oh, okay, interesting. Fans. Old School 36 Plus. So they just released this today or yesterday. Interesting. Okay, fuck with these. I actually kind of like how they look. Okay. Tour. Plans scheduled for this summer. The cadence, the Instagram accounts, new artists have been released in the previous few days, and fans work. Oh God, that is not good. When We Were Young festival? Okay, interesting. Yeah, that's not great in terms of... I have to admit, these comments, oh my god, it's a whole battleground in here. People are defending Vans Warped Tour in the comments. People are also just shitting on the whole thing. Okay, my thinking is right now they just announced some of the basic, maybe people that only OG Vans Warped Tour people know, but then slowly towards the end maybe they'll announce some of the big namers, right? Cadence is with a lean towards people still annoyed. Forking over $200 for tickets. There are examples of people shitting on the bands. On the organizers and reading through comments, it feels like serving a battleground. People shitting on them. Defending on Instagram yesterday. Okay, I think old school 36. So the brand didn't new info on the product developments. Reluctant and fans the fans Instagram account posted a photo of a new silhouette dubbed the old school 36, resembling a shoe combination of the old school and new school shoe. Silhouette to a marriage between old school 36 36 plus okay, so how does carpet? Oh, how is it 2,000? Oh my god. Jesus Christ. Right, Instagram. Login. Okay, I might. Yes, nice. Okay. Not now. Skate old school 36 plus. Okay, that's what it is. Oh, I can just add it in here. 4. Skate old price. $80, not bad. Okay. Right. Release tomorrow, January 30th. 2025. The worst hit this year, this quarter, was Dickies, negative 10% year-over-year growth. To wholesale channel for Dickies was strong this holiday season. The company saw a double-digit hit to its DTC channel. Dickies was a e-commerce plus Dickies. Does Dickies even have a store? Dickies have a store. I'd imagine it's mostly e-commerce then. Plus some in-store sales. Dickies was a popular look couple years ago, especially the flagship 874 pant, but recently and has been a slump, and at this point Mackin says there will be a deep turnaround involved with the brand. Dickies brand president company, global leadership team. Chris Goebel. Okay. For Gap. Interesting. By Strauss. Chris Goebel was appointed the brand president of Dickies. Okay. Chris Goebel. Wait a minute. To the position of brand president of Dickies to become Dickies brand president last quarter. Last quarter, late September 2024, and Duncan seems to have high confidence in his ability to turn around business. Chris's previous role was head chief product officer at Gap. For how long? Okay. Ninth leadership change? Oh God. So far, there have been 9 brand presidents. Cycles of Dickies brand presidents since 29. Since July 2023. Hopefully, America equipped skills to write niche. Okay, so about 5 years. Actually, Van's value channel. So getting close to the end. So let's talk about this real quick. The band's value channel. Interesting question was posed by. Oh, let me open up Workspace. Oh, excuse me, God. Damn. Okay, I'm getting distracted on LinkedIn. All right, I gotta get out of here. I gotta get out of here. Oh, I think Tesla is going through it right now. Okay, let's take a look at BFC Corp, ordinary share. Let's do filings and events. Okay, event, corporate events. Big tech earnings. Let's take a look at Microsoft stock. Okay, I think I can go back here now. Okay, let's see, the Meta stock. After the bell. Okay, let's take a look. Earnings release. Okay, so oh shit, 21%. I mean, that is very, very high. Jesus Christ. Off of a $40 billion revenue base to increase it by 21% is crazy. Okay. Operating margin, 48%. Oh my God. 20 billion, 49%. All right. This company is just making a shit ton of money these days. I don't know what. Let's take a look. So Meta. Take a look at Microsoft. Yeah, these big tech companies, I mean, I feel like they're probably so efficient at this point. Oh, let's do like a historical surprise, maybe. Earnings per share. Let's take a look. Wait a minute. 8.02. 3 months. Okay. Yeah, it's like a 25% upside. No, 30. Yeah, 33%. Off of a 6 expected. Okay. Yeah, I'd imagine Meta's probably gonna. Yeah, it's up a bit after hours. I would expect it more though. Okay, so consensus was, seems like 47. 48. Okay. Right, so beat consensus by a decent amount. I don't know what that amount is though. 40. I'll just simplify it. So 48 divided by 47 minus 1. About 2%. All right. But EPS, yeah, EPS view is pretty big. Earnings per share. Okay, let's go to revenue, earnings per share, all measures. take a look if they also break it down by like Azure for Microsoft. Kind of curious. This is a detour, but a necessary detour. Okay, intelligent cloud. Okay, so this unfortunately does not seem... These segments? Oh, here we go. Alright. Ah, shoot. How does this not have it? Okay. I don't know, honestly. Microsoft earnings release. Can we also listen in? It's 40 billion, damn. Year over year, it's 31%. Product release list. This would be very nice. New Copilot, consumer commercial. Yeah, this is a lot. Holy shit. Okay. I think as a CEO of a large company like this, I mean, how do you even know all of these? There's just no way, right? There is just no way. Oh, okay. Powered VMs. Okay. Virtual machines. Very interesting, very interesting. Oh, all of those products release this. Okay. Let's do, I think, ServiceNow too, right? Oh God, that's rough. That's rough. Oh God. Wait, Tesla earbuds. What the Euro? What's that? Oh, earnings. Okay, well, if it's up 3%, I mean, shit. maybe it's not a bad thing. So what did our VF end today at? Minus 3%. Yeesh. $35.27. Hey, you and I, Stiefel, we agree, but it seems like a lot of investors are looking to get out of the stock. I guess probably because they've been in it for a while now, and yeah, just probably need to cut their losses or something. Okay, so interesting question posed by an analyst. So Vans. Okay, right here actually. Florian Hutchinson, Bank of America. Wait, what the hell?
Yeah, the health of the inventory looks good. You know, Vans will always have a value channel component, so I don't want you to still off this call thinking, you know, that value channel is 10%. It's only for selling off, you know, product that didn't sell in our non-value channels. So it's not. It's probably a third of our business. It will stay about there. And it's, as I said, the health of the inventory looks really good. Now we brought that down. It was probably up to over half of the business at one point.
And you think the third is the kind of the go-forward ratio that you'd expect?
I think so. You know, it could drift lower than that over time. I'm not afraid of the value channel. I think you could tend to think the value channel is just discount. Actually, the profitability of the value channel can be very good. It's, you know, but we want to make sure we're serving. The cool thing about Vans is it does serve a very broad consumer base, and we wanted to. So we want to be where our customers really want to shop, and the value channel is definitely part of that. But yeah, I would guess that the non-value channel will grow faster over time. You know, if you look at this 2 years from now, 3 years.
Okay, I think maybe Vans value channel could be referring to. Vans outlets. Created sales clearance events. So my thinking is, I think the value channel is defined as any discounted product, think outlet stores or clearance items. Racking provided some interesting color sharing that the fans value channel is about a third of total revenues, and is something that Bracken is not scared of. In fact, he says fans will always have a value channel component to serve its broad base of customers. Turns out that this business still is profitable despite the discounts. Received discounts. This makes me wonder, how much does it cost to make a Vans shoe? How much does it cost? Okay. Okay, so financials. Yeah. Product development updates. So I'll maybe turn this into heading 4. Wait, is this heading 3? Okay. Heading 4. Oh, jeez. I don't know why. Okay. Nice. Heading 4. Okay. Heading 5 maybe? Okay. Financials updates. The quarterly financials exceeded all expectations this week from a revenue standpoint. Revenue and profit perspective. $50 above previous guidance on revenue. And financials, estimates, historical surprise. Okay, it's already 5, so we are really taking our time with this. This is EPS. Revenue channels. This quarter. So part of the reason why this quarter exceeded expectations was the improvements of consumer. Wholesale. Was the better than expected wholesale channel revenues. So, okay. So, channel mix. VF. Show a mix concentrated more towards DTC. Than wholesale. Sell-through of inventory. Holiday season mostly comes from e-commerce stores and from VF branded e-commerce or in-store stores. Inventory for the holiday season. So wholesale partners, but for the holiday season before Q2 2023, Q2. So these inventory sell-through sequentially. think sell through. I want to. So what does sell through mean? Is it appropriate to say self VFs high sell inventory sell through to retailers in Q2? They stock up for the holiday season. Ended September 30th. Let's see what this says. Oh, God. Selling. Okay. Selling is to the retailers. Got it. Because the sell-through inventory. Okay, maybe this isn't the right way to phrase it. Traditionally, VF's Q3 earnings show a mix concentrated more towards DTC than wholesale because wholesale partners typically stock up. Mostly comes from wholesale because wholesale partners typically stock up for the holiday season in Q2, resulting in high selling. Retailers, something in high selling. Compared to Q3. Oops, selling inventory to retailers compared to Q3. As a result, the inventory sell-through inventory to actual customers and Q3 flows through both the retailers, wholesale partners, and VF. Selling and VFs. With an emphasis goes through both the wholesale partners and VF. VF is able to capture more of the South. I don't know how to. With limited selling. As retailers as wholesale partners work through their existing inventory. This dynamic changed this quarter. So actually growing 8% versus DTC falling year over year. Nice. Okay. Change this quarter. Paul, so Bracken and Paul provided some helpful insight and discussed that this was the results of 3 big factors. So number one was pull through of existing, say, wholesale partner pull through. Sale partners wanted to order inventory before the Lunar New Year. So inventory that was traditionally ordered in Q4 was ordered in Q3, around 50% of higher percent contribution. Faster wholesale sell through. Wholesale partners also saw quicker than expected, better than expected sales in VF's product mix and ordered and made reorders of inventory, and then less cancellation of orders. I think this is tied to point number 2, where wholesale partners had a great holiday shopping season. As a result of this changing dynamic, Paul expects Q4 revenues to taper. Taper off of revenues to decline. For also revenues to slow. Okay, maybe add this later. It's actually 550, right? Right here. Oh, whoa, yeah, not 250, sorry. Should be about 90 million above. Percent above revenue and guess 30, 28. %, above the consensus EPS. On consensus revenue, okay. Call this cost structure / efficiency gains. Okay. So far, the VF team has delivered on its promise of reducing OpEx. Okay. 300 run rate by 2025. $7 million. Okay, I have to see what they mean by that. I don't fully understand this OpEx part. Okay. Down from 1/2. Okay. Okay, so I think I need to take a break. Oh God. And I want to focus on some of the other earnings reports, and I need a shower. Got so much shit I gotta do. I also need to return this. Okay, so I think I'm gonna stop this here. This is taking a lot longer than I expected. I think the stream is going on for, oh man, yeah, it's been about, I'm getting carried away here. It's 2 hours and 47 minutes. So I'm gonna end this here, go shower soon, and then I will catch you guys soon. All right, peace. Peace. Oops.